Why did the Fed cap Wells Fargo assets? Have you ever wondered how a major bank can face such serious consequences for its actions? In the case of Wells Fargo, the Federal Reserve imposed a cap on the bank's assets in 2018. This decision stemmed from a scandal that erupted in 2016 involving fake accounts. Employees at Wells Fargo created millions of unauthorized savings and checking accounts in customers' names without their permission. This was driven by intense pressure to meet unrealistic sales targets. The fallout from this scandal was severe. It damaged Wells Fargo's reputation and raised serious questions about its risk management and corporate governance. The Federal Reserve's asset cap was a regulatory action aimed at limiting the bank's growth until it could prove it had made necessary improvements. By capping the total size of Wells Fargo's assets, the Federal Reserve restricted the bank's ability to expand its lending and other financial activities. This was a way to reduce potential risks to the broader financial system. This action was quite significant and unusual, reflecting the seriousness of Wells Fargo's misconduct. The asset cap served as a strong incentive for the bank to reform its internal culture and management practices. Wells Fargo had to submit detailed plans to the Federal Reserve, showing how it would address the root causes of the scandal. This included tackling unrealistic sales goals and improving supervision. Only after meeting these requirements could Wells Fargo request the lifting of the asset cap. Historically, this situation illustrates how regulatory authorities can intervene when a major financial institution's actions threaten consumer trust and financial stability. Wells Fargo had long been seen as a stable bank, but the scandal revealed vulnerabilities in its internal controls and corporate ethics. The Federal Reserve's asset cap was a clear message that even large banks are subject to strict oversight and consequences when they fail to protect their customers. In practical terms, this action highlighted the importance of strong governance and ethical standards in banking. It also showed the role of regulatory bodies in safeguarding the financial system by imposing limits on institutions that engage in unsafe practices. For Wells Fargo, the asset cap was a turning point that forced the bank to rebuild trust and reform its business model to prevent future issues.